12 pips or 15 pips, that is not, certainly not indicative of a big trend reversal to the upside, to say the least. It just means we're range trading within this fairly tight area, and I still have to lean towards the short side. Once we get this news out of the way with, what we're likely to see is the Euro US plummet. Now, this is another classic play. They get the herd, which is the majority of your retail and institutional traders, going long, and then just like pulling the rug out from underneath them, it crashes lower. So what I would suggest, how to play Euro US, wait for it to move a little higher towards that 140 area, if we can even get that level, and I would start looking at short, scaling in small short positions up in that 140 area. I would not be too quick to get long on this particular currency under market conditions. Now, US Swiss franc, this is basically Euro Swiss franc. That's what US Swiss franc is. There is no such thing as US Swiss franc. This is the cross pair. In my opinion, we're probably going to see this supported between the 86 and 87 level. Probably take one more dip down before we reverse and start getting long again. But again, we're relying heavily on the Swiss National Bank to support that. The New Zealand US currency pair, again, what's consistent and runs through this thread on this presentation, in Forex we're either buying or selling US dollars. It is that simple. And what we have to do is, if we're going to buy US dollars, we look for places to do it. And if we're going to sell US dollars, we look to do that also. Is this a good place to sell US dollars? Well, potentially, guys, I think it just may be. So what we're going to do is we're looking at what's going on up here. We can see some fairly stiff resistance around this 81 level. Probably not a bad area to start thinking about getting into shorts, because you can see that we're moving into overbought territory, and when we see that overbought territory like this, that's potentially excuse me, that's a potential area for us to get in long. Now, I'll certainly say what is a concern to me here is that we keep coming back down and tagging the Vantage Point 18-day predicted moving average. This is acting as a pivot support currently. But again, once the rumors and everything is cleared up by Wednesday, with what's happening in the Eurozone, this is likely to plummet lower also. And trying to break things down simply for everybody, again, you can see, is this thing making higher highs, or are we making lower lows? Clearly we are making lower lows. So all we're doing is looking to watch closely to see where this thing runs out of steam. In my opinion, it could be as close by as the 81 level, where this thing runs out of steam and then plummets lower. But we're probably going to see hope, and everything else is, everybody's going to be saying, oh, things are going to be fixed in the Eurozone. We're going to see an equity rally. Next thing you know, New Zealand US pushes towards 81, 82, 83, maybe even the 84 level. However, extremely unlikely, guys. So we got to be careful about that. Now, looking at one of our final pairs here, we're looking at the US-Canadian pair, one of my personal favorites. Trade it pretty much every day, every week. Now, what I'm seeing here is these longer-term indicators from Vantage Point starting to flatten out. Our predicted MACD, we're still above the zero line. You can see, as long as this predicted MACD is held above this zero line, the US-Canada has remained primarily in an uptrend for approximately the last 3 months, so 2.5 months. So what we would be looking, I can't say whether we're going to break parity or not, but right now parity is going to be a very powerful psychological level. Can the US-Canada stay above the parity? Well, it's a tough call here, guys, because Australia-US didn't. It broke back up into the 103 level. We could be looking at a move down towards the, well, maybe the 99.50, maybe even the 99 level, and then we'll start looking for longs again. But first we have to break a very, very significant level, which is parity. You can see that our indicators, the predicted long-term difference from Vantage Point, is starting to flatten out in oversold territory. This suggests we may get a bounce here very soon. So to begin the week, my bias remains to the long side. Dollar yen, this pair, you can see we are making a lower low. We have pushed lower on Friday in very thin illiquid markets. This is a big, big concern for me right here. You can see the predicted MACD. Just think of this as the exact opposite of what I just said on US Canada. The zero line represents a line in the sand between bullish and bearish, and unfortunately this thing is crossing that trigger to the downside right on the zero line, and we have a sell signal that matches it on the predicted true strength indicator. Not a great setup for longs. However, the play here is again going to be related to Bank of Japan intervention. Are they going to intervene? I think if they do, the intervention may happen Sunday night. To be perfectly honest, it's very possible, because I'm sure that the Bank of Japan is no different than me. They see exactly what I see, and if 76 is breached, if we have a sustained break of the 76 level, then quite frankly I don't know what that opens up to on the downside, because we're talking about post-World War II levels here. I don't know what to say. So that you can't pick a bottom when there is no bottom in sight. So we have to be careful. We've had fun playing this for 3 months, just buying on dips, taking 20, 30, 40 pips here and there, but a more substantial run lower is possible. So despite what we've been doing, just keep that in mind. Nothing wrong with getting stopped out on that particular trade, because again, I don't want to sit here and hold this thing. I'm not really interested in holding dollar yen if it gets down, if it gets down into the 75 level, 74.90, then quite frankly we could go down to 72, 71, 69. I don't know. So that's why you have to be very, very cautious with this particular currency pair right now. Now, the good thing, what I'm saying, is that obviously the Bank of Japan is going to think very similar to what I think, and they're not going to want that to happen, because then the sellers, the bears, are in complete control. If they can get it below 76 and hold it below 76, they're running the show. The bulls, we're on the bull side. Smart bull steps aside. So keep that in mind. So with that said, this is the Forex Weekly Outlook for the week of October the 24th, 2011. And just to advise everyone, so everyone knows, I will be on vacation starting this, October the 25th for 7 days. So there will not be a Forex Weekly Outlook next week. But anybody has any questions in the coming weeks, feel free to email me here at TraderPlanet.com. And I look forward to speaking to everyone. Thanks.